Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really glad to have with me once again Amir Adnani. Amir is an entrepreneur and mining executive. He is the founder of Uranium Energy Corp and has been the president, CEO, and director of that company since its inception in 2005. He is also the founder and chairman of GoldMining Inc., and that's who we're going to talk to Amir about. We're going to talk to Amir today about that company. Amir is frequently invited to speak at very prominent gatherings, and he's somebody that I've known for a number of years. Certainly one of the more respected, I think still a younger entrepreneur in the junior mining sector. So thanks for joining me again, Amir.
Hi, Jay. Great to be with you, and thanks for the introduction.
Well, it's really good to have you, and I should tell our listeners, your company trades in Toronto under the symbol GOLD, strangely enough, GOLD. That's GoldMining Inc. And in the U.S., you can buy it, as I have, under the symbol GLDLF. 135 million shares, trading up a little bit today at around 60 cents in U.S. money. So it's got a market cap of a little over $80 million. It's a company that's unlike most of our sponsors and most of the companies that I cover in my newsletter, because I guess you might call it an option play, because Amir likes to go out and buy valuable assets, lots of ounces of gold in the ground, at fire sale prices during down market times. And he's certainly done that. He's amassed a very sizable portfolio over several different countries. 9.5 million ounces in the measured and indicated category, 11.7 million ounces in the inferred categories, and if you count in the other minerals like silver and copper and other things, got a 26 million gold equivalent ounces in the ground in the various properties in countries with Canada, U.S., Colombia, Peru, and Brazil. So it's really quite impressive, Amir. And now I have to start by asking you, today we've had a bit of an update in the gold price, not as good, I presume, for buying assets cheaply. Are you happy or sad with today's move? It was some $17 up higher in gold today. How does that make you feel, Amir? Are you happy or sad about the rising gold price?
I'm certainly happy, Jay, and I think we're going to have to see probably a serious breakout. And what I mean serious is I'm talking about a breakout above $1,350 or $1,400 gold for the junior companies, those single asset companies that have great potential, but in this current environment have become orphans to attract capital. And I think you know what I mean by that. I mean, $1,200 gold or being back over $1,200 it's nice to see, but it doesn't mean all of a sudden that junior companies will get capital market support and endorsement all of a sudden. And I think the more sort of institutionalized the market has become with ETFs and the GDX and the GDXJ, all the capital flows initially really go to the companies that are in the ETFs. Most of the assets that we've acquired over the last 6 or 7 years now were companies that were not in ETFs, were almost in a way become orphaned because capital markets have passed, moved on and focused on more liquid names, and everything is all about liquidity these days. The more volume you have, the more institutional investors will want to buy and own you. So this is, in a way, you could argue the structural changes in capital markets and our sort of junior market have, in a way, created the opportunity for a company like ours, not only the extended bear market in gold, but also the structural changes we've seen in capital markets that have shifted capital away from smaller companies. Even if you've got exciting, promising projects, I think the last 7 years have been very difficult to attract capital and grow. So for us as a consolidator, this has, in my opinion, been almost a once-in-a-lifetime opportunity where you have a perfect storm developing, where it's a really great time to be a buyer of resources or ounces in the ground.
Yes. Of course, you have to have money to do that, and you have had success in the past, which has allowed you to raise capital, Amir, and to have the capital in hand to go out and buy these projects very inexpensively. I went to your website and I saw some 10 properties in your portfolio with 43101 resources on them. Are there any that may catch the attention that might be projects that investors should be aware of that are most prominent or most likely to start catching the market's attention?
Certainly, I think depending on sort of what's happening in the market with different jurisdictions, you start to see different interest in different projects. So what do I mean by that? Over the last, and this is interesting because you've been following our company one way or other since inception, really, when, as you recall, we were initially called Brazil Resources.
Yes.
And that name implied we were solely focused in the country of Brazil. And as we kind of outgrew Brazil in terms of assets that we acquired in Parastate, we've expanded our portfolio to 5 different countries now. We're in Colombia, Peru, Brazil, the United States, and also in Canada. Mm-hmm. And so we're in 5 different countries. And again, like I said, you've been following this since inception, and I think at times you've been in the stock, at times you've been out of the stock. I was pleased to hear that as of today you're back in the stock, so that's great. But Jay, look at the U.S. for example, as a jurisdiction. I mean, during the 8 years of the Obama administration, there was literally war with the mining industry. The EPA was very hostile towards the mining industry, so the U.S. was in a good jurisdiction to be. That's when we acquired our Whistler project in Alaska. It's a gold-copper porphyry play, 170 square kilometers. We acquired it for stock for a few $1 million. I mean, it was quite amazing. This was summer of 2015, right? It was just a very difficult time. Politically, it was the wrong time to be in mining in the U.S. The gold price was in far worse shape than it is even right now. In retrospect, it was the bottom of this recent bear market cycle. And we bought this great project with resources, 70,000 meters of historic drilling. And today, we have a much better climate for mining in the U.S. Under the new administration, there's renewed interest. There's with the tax reforms and reduced red tape, we're seeing a lot of renewed interest in Alaska and Arizona and Nevada. In fact, there's increased political risk in other parts of the world. That we've seen a lot of problems for major mining companies in Africa. And so the U.S. and Canada are great jurisdictions to be in. We have a project in Canada called the Yellowknife Project, Jay, where over 200,000 meters of diamond drilling was done. If you just look at how much it would cost to replace that work, go out there and hire people and get rigs and go to drill off that project today, it would cost over $60 million to replicate that work. And we bought that project in 2017 for $8 million in stock. So to answer your question, I mean, I think we've got really exciting resource-stage projects. Our projects in Brazil were, again, historically drilled projects that are very close to infrastructure, power line, etc. And each project really has its own merit, its own selling point. But when you can buy these assets for cents on the dollar, and when you think about how many years, how many tens of millions of dollars it would take to replace the work that has been done, the drilling, the development. We did a calculation recently, me and Garnet Dawson. Garnet's the CEO of our company, to see how much work has gone into the portfolio of assets we've acquired, Jay. And it's something close to $270 million of work. And we're not talking about historic work from the 1980s. We're talking about since the year 2003 or something. We used some cutoff. We were kind of thinking about, over the last 12 years, how much work has been done, so to speak.
Yeah.
So to think about how much work that is, and you think about whether you think about our market cap today relative to what the value of the historic work is, whether you think about our market cap relative to the gold resources in the ground, I think it's an incredible story when you think about just, and Jay, that's the reason I'm focused on acquisitions, because when you can buy assets for a fraction of what it costs to go out there and do the work, I think now is the time to be a buyer, and that's what we've been doing, not just for a couple of years. This is, as you know, our 7th year as a company, and you can't do it without the right market support, the right institutional investors, the right backers, because like you said at the get-go, I mean, it takes financial stamina to be able to execute this kind of strategy.
Right. Well, Amir, with very little time left here, I've got to ask you, I think I saw your calculation is something like the market is paying something like $4 per ounce in the ground right now for your portfolio. But in fact, in 2016, when gold was a bit higher, not an awful lot higher, they were paying something like $40 per ounce, the market was. So is this, and that was before you picked up a lot of the properties that you have now. What are your thoughts on What would we have to see in the gold price to get back to $40 an ounce in the ground for your company, as opposed to $4 now?
I was listening to your previous speaker talking about the turn and what happens when we have that turn in the market. And we had a bit of a turn, as you very well know, and as your listeners would know, in 2016. Now, it didn't last long, but it was a nice glimpse into what a gold bull market could look like, right? We had a beautiful run there from spring of 2016 until Trump's election, right? And so during that period, we saw our company, which at the time was called Brazil Resources, we saw during that time a real outperformance share. And that was, in my opinion, because of leverage. I think at a time when the market turns, leverage matters, and leverage is about size. And the greater the size and the greater the gold per share ratio that you have, the more gold resources in the ground you have per share, the more leverage you have. And I think when you think about a company that is debt-free, then that leverage becomes even more powerful, because a lot of times mining companies or resource companies are sort of hampered by the fact that they take on too much debt to develop assets. So I think in 2016 we saw that gold mining could be a real outperformer. In fact, we were up that year close to 400%. We outperformed the GDXJ. We had a great year in 2016. As you point out, today we have substantially increased our total gold resources and our portfolio. With the Toronto Stock Exchange listing, we also have a more senior profile in the capital markets in Canada. Hopefully in the U.S. we'll graduate and we'll also get a senior listing there as well as the share price appreciates. But look, ultimately, Jay, today we can also boast having some mining companies, intermediate gold producers as shareholders, which we didn't have back in 2016, names like IM Gold. So I think it's really about size, it's about leverage, and it's, this, you cover the sector. Where else do you get exposure to as many ounces in the ground in a diversified portfolio like our company has put together?
All right, Amir, we're just about out of time. One last question I want to ask you, though, before we depart today is, what are your plans for this portfolio? And I'm guessing that it would differ with each property, perhaps, but might you look to do some work yourself, or are you looking to perhaps bring in a major or some other companies to spend their money to develop these projects further, put them into production, option out, sell the whole company? What are your thoughts with a minute left?
During the period when we see the low gold price, sub $1,400 an ounce, we are out there and we're Vikings. We're making acquisitions and we're growing our total land package and resources in the ground. Gold north of $1,400, we'll become farmers and we'll start cultivating and developing the projects that we have, de-risk them. We could be selling individual projects, focusing on projects we want to advance to production, or we could be potentially an M&A target, Jay, for the fact that we have such a large gold resource portfolio at a time when industry's resources and reserves are at a decade low, peak gold, and all the other issues that are being discussed. There's a shortage. I think this is really the right time for us to have acquired all these projects.
Yeah, well, it certainly seems like it, and that's why I decided when I started looking at your story I needed to buy some shares this morning. So, Amir, thank you so much for being with us, and we'll look to keep up with you going forward, that's for sure. Well, folks, we do have to go to a break now, a commercial break. Ronald Stoffel will be with us, but few people have a better understanding of the fundamentals underlying the gold market than Ronald, I would say. So I think you're going to want to hear what he has to say. And you might want to listen to some of our commercials, believe it or not. I think it might make some sense to do so, because these are companies that I've invited to come in as sponsors. They're not just companies that say, hey, I've got some money, let me in the door. These are companies that I write about, I follow, I own in most cases. And so listen to the commercials and then, of course, do your own research and try to figure out whether it makes sense for you to consider buying these shares.